Welcome back. Cattle markets in 2016 have provided a wild and mostly disappointing ride for producers this year. So what can we expect as we head to the end of this election year? Joining us now to talk about the market outlook is Jessica Sampson, the Livestock Marketing Information Center here in Denver. Jessica, what is the outlook for cow-calf producers for the remainder of this year?
Well, I think you kind of hit the nail on the head. It's been a disappointing year, and unfortunately, that's probably going to continue out the rest of the year in terms of lower prices. If we step back and take a look at the market, we just have a larger supply of cattle, larger supply of beef cattle, more feeder cattle out in the country, more fed cattle, more beef supplies. And it's not just in the beef market, it's in all the protein markets. So if we look at total red meat production, we're actually up almost 70 million pounds last week compared to the week a year ago. And year-over-year increases in beef production account for almost half of that. So we just have a lot of protein on the market, and that pressures prices lower, unfortunately, in the beef market and the other protein sectors. So with that, feeder cattle prices in the Southern Plains last week were actually 40% below year-ago numbers, and that's hard to see, that's hard to hear, and it's a tough economic environment for our producers. Fed cattle prices right now hovering around $100 per hundredweight, and just significantly lower than a year ago and lower than what we all thought originally. So if we look at fourth quarter, we're moving into fourth quarter, we are forecasting continued lower prices. On those feeder cattle prices, we're seeing about 25 to 30% lower than a year ago, so fourth quarter of 2015. And those fed cattle prices still about 10% below year ago numbers. So unfortunately, just on these larger supplies and these price movements, we're not seeing a lot of upticks. There is some good information in the market. We had a recent cattle on feed report that's slightly bullish for the market and could support fed cattle prices into fourth quarter. We're moving into a possible seasonal increase in the cutout value with a holiday buy-up, and that could support fed cattle prices also. And that all feeds back to possibly supporting feeder cattle prices in the short term, along with those seasonal kind of normal upticks in prices we usually see. So there's some potential good news out there, but generally lower prices than a year ago still.
So the one piece of good news is this big corn crop. Tell us your perspective on that.
Right, and that is excellent news right now. So we're probably just over halfway through corn harvest right now. So according to the USDA reports, we're about 60% done with our corn harvest. Compared to last year at this time, we were about 70% done, but we're pretty much on average for being 60% done. We're looking at a record corn crop of over 15 billion bushels. Now, obviously, the corn producers aren't very happy about that because that means lower prices. Right. But cattle feeders, cattle producers, that's great news for us. We're looking at a corn price this coming year of about $3.15 a bushel. So very affordable for those cattle feeders. And obviously, if the corn price is cheaper, that allows them to have more money to spend on feeder cattle here in the future.
That's
so big thing to watch is, if we do for some reason run into a short corn crop, very unlikely to happen in this harvest, but looking down the road, obviously those corn prices highly influence the price of feeder cattle.
So I wanted to look down the road, as you mentioned, and talk a little bit about 2017. What's your overview of the cattle markets in 2017?
Sure. Continued higher cattle supplies. We're still growing the cattle inventory. Obviously, these lower prices have slowed down that inventory growth, but just due to that biological nature of cattle production, it doesn't stop immediately, right? So USDA is actually expecting total cattle inventory to be up 1.4% in 2017 in January compared to January of 2016. So that means more cattle still on the market. As we forecast our prices, we're still forecasting lower prices, but we don't expect drops to the extent that we saw this year. So when we look at those prices, the first half of the year, we're looking at feeder cattle prices that are more on the 10 to 15% lower year on year as opposed to the 40% lower we're seeing this year. As we move into the second quarter and then second half of 2017, we're seeing those price drops get even smaller in terms of the year-over-year changes. So looking at about 5% below year ago moving into third quarter of 2017. Obviously, that's still pretty far away, and a lot could change if we ran into drought situations. Again, like we said, short corn crop. There's a lot of factors that can change that, but right now we're not expecting another huge year-on-year drop.
So I'll put you on the spot. What's your best advice for cattle producers as we enter 2017?
That's a great question, and one we've definitely been asked a lot. I like to say out front that those cattle producers know their operations better than anyone, so I'm not going to sit here and tell them what to do. And there is good news in the market, like we've talked about. Export numbers are up. The economy's still growing. There's some good bright spots. But we look into 2017, and we're in that time of year where cow-calf producers and stockers are making a lot of production decisions. Do they retain their calves? Do they sell them now? And we want to look at that crystal ball. So what we see in the market right now are actually calves are being slightly undervalued, and what that tells producers is to hold on to them and sell them to the feedlots at a heavier weight as opposed to the lighter weight. Now, that's the signal to everyone, right? So when you're making these marketing decisions, you have to say, well, if I'm doing this, we probably have a lot of other producers out there doing this, and that could bunch up animals down the road when you sell them. But retained ownership this year really is a viable option to look at. You need to have a very sharp pencil, though. You need to understand your cost of production, feeding the animals that extra time. If you do any value-added programs, preconditioning, forward contracting, you need to know what those cost you, and you need to know down the road what price you can take for those animals. So on our forecast, when we're saying first quarter, we're coming in looking at those yearling prices being about 10 to 15% lower, think of what you got for those cattle last year. Does that work for these programs you're thinking of doing in retained ownership? Don't mean to be, all doom and gloom. Like I said, there are some bright spots. Cheap corn prices, exports are doing well, but it's going to take a real sharp pencil here for the next couple years still.
Great advice. Thanks for coming.
Thanks for having me.
Yes. Now, if you'd like more information on input cost, weather outlooks, and cattle prices, you can visit the Livestock Marketing Information Center's website. That's lmic.info.